Get started. Okay, so here we are at MSN.com. I'm not using MSN for any particular reason. I just kind of know where the terminology's at, and it's easy for me to find it kind of quick. So that's why I'm using MSN, but you could use Google or any other site. But this will help you find some of the terminology that we've been talking about in the first 4 lessons. So in order to do that, you just go here to about halfway down the page, and you're going to go ahead and click right in here where it says Market Update. And so the company we'll use is Johnson & Johnson. So I'm just going to type in J&J because that's the stock ticker, and then I hit enter. Okay, so we arrive at the Johnson & Johnson main page where it has all these numbers and information. So I'm going to kind of walk you through in the same systematic order that we learned through each lesson. So in lesson 2, we first talked about really the income statement. And so if you remember, I said that there's 3 documents that every business has to have. The first one was the income statement, the next one was the balance sheet, and then the last one was the cash flow statement. Now, as you look at this page, if you follow my cursor down here, under financials over here on the left-hand side, you'll see that there's the income statement, the balance sheet, and the cash flow statement. So those are those 3 documents that I told you were really important. So let's go ahead and start off by going to the income statement, and this is what we really learned in lesson 2. So if you want to go back and review that, this is where you would find this all at. So you go to the income statement. Now, if you remember the slide that had Nancy's business, and we kind of followed the money through her business in 1 hour, and then we did it for 1 year, that's where these numbers and this terminology is really coming from. So as we look at this, as you look at this income statement for Johnson & Johnson, you'll see at the very top there's interim and then there's annual. And so I have it set up on annual, but you could click it on interim if you wanted the most recent quarter. But if you do annual, that's each year. So 2007, 2008, 2009, 10, 11. If you do interim, it'll break it down by quarter. Okay, so if you remember, the total revenue was the money that came into the business before any of the costs were subtracted. So there's that number. That's your total revenue. For Johnson & Johnson, this is $65 billion because these numbers are in millions. Okay, so if you scroll down to the bottom, it'll show you that those numbers are in millions right here. See, financial data in USD, values in millions. So whenever you look at that number, it's actually in billions. Okay, so that's $65 billion. The other term that we saw was the cost of revenue. So here was that cost of revenue that came out. And then when you subtract that out, this is the gross profit. But the terminology that I'm kind of highlighting here is the important stuff that you really got to understand. So the total revenue is what comes in. The cost of revenue is what you would subtract out of that. And then you'd also have your operating income, which is added in. But the bottom line figure, after we went through that whole process, here comes your tax before the taxes, after the taxes. But the bottom line figure that we said was really important to understand from the income statement was the net income. That's the number you really got to understand. So as we look at Johnson & Johnson and we look year to year, look at how their net income had changed from 10 billion to 12 billion, 12 billion, 13 billion. And then in the last year, they've actually had kind of a rough year with $9 billion. So this is the net income, and that's the bottom line profit that they made after they paid all their employees, paid all the people. That was the profit that was left in the business for 1 year was $9 billion. So the next thing we're going to look at now, that's for the whole business. Now we didn't break that down per share. I'm going to break everything down per share next, which is what we learned in the last lesson in lesson 4. So in lesson 3, we learned about the balance sheet. Okay, so we come back over here to the financials and we just covered the income statement. And the next document that was really important was the balance sheet, because this showed us how much the company is worth if it died today. So if they ended business, Johnson & Johnson packed up their bags, fired their employees, paid all their debts and all that, that's the bottom line of the balance sheet is going to tell us that figure, which was the equity. So let's click on balance sheet. Same thing as before. If you look here, we could do interim or we could do annual. I would recommend clicking it on interim because that's going to give you the most current quarter of what the company's worth right now. You don't really want to know what the company was worth a year ago. You want to know what it's worth right now in the most recent quarter. So as we go down the balance sheet, if you remember, I told you that the balance sheet was made up of assets and liabilities. Okay, so the total assets right here listed, and these numbers are in millions as well, so that's $113 billion is the total assets that the company is claiming on their balance sheet. As we go down, we can see the total liabilities right here, which is $56 billion. So just looking at that, we can see the total assets are almost double what the liabilities are. And that's a good thing. So if you keep scrolling down, as you get down to the bottom, the important number on the balance sheet is down at the bottom, which is the total equity. And all they did was they took the total assets minus the total liabilities, and you end up with the total equity, which is $57 billion. Okay, that's what the company is worth in total. If you added up all the shares of this business, it's worth $57 billion on the books. Okay, so let's take this to the next step. So now we understand what the whole business is worth with their net income and also their equity, which were the two really important terms to understand. And now what we're going to do is we're going to divide the business up by 2 billion shares. Right here is your total common shares outstanding. And you see it says 2,724,000,000. Remember, all these values are in millions. So let's divide up this company by that many shares, and let's start seeing what one share is worth when we look at the equity and we look at the net income. So in order to see that, let's go back to the top level page. So I'm just going to go back. I'm going to type in J&J to take me back to the top level page. And so here I am back at the top level page again. And as we scroll down, we can look at the EPS. And if you remember, the EPS represented, when we looked at the whole business, that was net income. When we break it down to just one share, that's the earnings per share, the EPS. And that is $3.48. So when we took all those shares outstanding, which was 2.75 billion shares outstanding, there's the number again right there. The EPS, the earnings for one share, was $3.48. Now the book value, which is from the balance sheet, if you take that balance sheet and you looked at the equity and you divided out all these shares, it would give you the book value. Unfortunately, they don't have the book value listed on the top page. You have to go to financial highlights, I believe. Let me click there. Okay, and then right here you can see the book value is listed. Now if you wanted to calculate the book value, just go to that balance sheet, you'd take the equity divided by all those shares, and it's going to give you this number right here. It's going to give you the book value. So the book value for this company is $20.95. Okay? And if you remember, we talked about the margin of safety that was associated with a business was the difference between this book value and its market price. So let's go to the market price, which will be the last thing that I show you here. And as we look, right up here is your market price of $64.22. So right now, if you wanted to buy one single share of Johnson & Johnson, it costs you $64.22. And you'd have $20.95 of book value. So your margin of safety there, let's say the earnings in the company started dropping and people didn't think it was worth $64.22, you'd see that number come down here and start approaching this book value. And that's your margin of safety. So the closer that this book value can be to the price here, the less risk that you're assuming, because the price isn't going to go much lower than the book value as long as that earnings remain positive. And that's really kind of the key thing to understand. And there's our earnings per share, or the EPS, which is $3.48. So I told you that was going to be the last term that I showed you, but I lied. I've got one more that we learned, which was the price to earnings, the PE ratio, and I want to show you that. So just look, if you were going to do the math, the price is $64.22, and you take that and divide it by the EPS, which is the earnings per share, which is right here, which is $3.48. If you don't want to do the math and you just want to look it up, go back to the top level page, and when you scroll down here, you're going to see the price to earnings ratio right here. The PE is $18.40. And if you remember that little phrase that I taught you with the PE, so for every $18.40 I spend buying Johnson & Johnson, I can expect $1 in return 1 year later. So there's a practical exercise of a company, Johnson & Johnson, and how all those terms that we learned through Nancy's business are all now related into a real company that is a huge company. And hopefully a lot of this stuff is starting to make sense for you. And if it's not, just go back to the very first lesson, go through these 4 short lessons, and maybe this practical exercise will make more sense if you didn't really capture everything this first go around. So I'll see you in lesson 5, and thanks for watching.